So, Ray Dalio, who is a billionaire investor and a hedge fund manager, has come out to say that property investing is now even riskier. Now, does that mean that we should no longer invest our money in real estate or use real estate or property investing as a viable means or vehicle to financial independence? I think there's a variety of way of looking at this. So, number one, Ray Dalio, who's a hedge fund manager, there are a bunch of hedge funds who has a bunch of capital that right now and in the past have been investing a lot of money into buying up properties, even buying up properties over asking or over listing price. What does that mean for us though? We can put our money into real estate, and I think we should. And just because you heard of Ray Dalio saying that property investing isn't the way, um, I mean, there's different philosophies. So getting into real estate investing, I do think that is a little bit risky if you don't know what you're doing, because now there are different ways of acquiring property. Now there's always been different ways of acquiring property, but just not a lot of people have known about it. Just like there's been traditional ways of going to school, getting a loan, and using that method of acquiring an education, like sitting down on the desk and listening to a teacher give a seminar. That's one way of doing things. Or you can take the other route where now there's different online courses that you can buy. That's the untraditional route of doing things. The same way as any other traditional way of doing things. For example, getting a 9 to 5 job, which is totally fine. I had a 9 to 5 job. It's cool. But there are other ways. Trade school. There's investing, especially with now the internet. There are different methods of doing things, and you will find like the Pareto's principle, where 80% of the people are doing the traditional route, which is fine, but there's 20% of the people that use unconventional methods to do the same thing that the 80% are doing, but just doing it a better way. Come to real estate, there are different ways of acquiring property, like I said. And one of those methods is subject to and or seller financing. Just creatively finding a way to not necessarily use a bank where you are restricted by various means, credit, down payments, debt to income ratio. Do those things, do any of those three things make you not able to make payments, especially if you're financially savvy? No, you if you know how to manage, if you know how to budget, and if you know how to invest, you should be fine making those payments or finding a way to make those payments. I am a real estate investor, but I'm also considered a unicorn investor, meaning that I don't necessarily doing the traditional routes of just representing buyers and sellers, but I'm also representing myself. I'm also an investor, and I also represent investors. So there are a few properties that I have under contract that I want to go over and look at the numbers. And we can go see one of those properties right now, but let's go over some of the details of one of these properties. So right now I have a few listings that are on the MLS right now, which is what us realtors use to put properties on the market so that everybody can see it. Most of them being these types of um, properties subject to. And here's the thing: you have your traditional route, which I explained already, where you can go to the bank, or you can even find these on the MLS, where if you're a buyer and you of those few things that the banks will cut you off and not let you use a loan, whether that's the down payment or most of them are because of employment. See, it is a little bit harder for business owners or even some people that are working and for whatever reason they can't apply for a loan, but you have the money, you have the means to put down on a property, put a down payment on a property, and you have the means to make those monthly payments, but the bank isn't giving you a loan. This is a way that you can use to invest in real estate without necessarily going to the bank and getting having to put I mean, the down payment might be similar to what the bank will ask you because whether you have bad credit or whatever. But this is a way for you to start investing in real estate without necessarily having to go to the bank. So one of those properties is, let's see, let's go to Perthshire. Perthshire. Hopefully, I'm saying that right. And look, I have another one on Auburn, and that's a traditional sell where you do have to go to the bank and and apply for that loan. Now, if I already spoke to the seller, they are not wanting to do seller finance or subject to. They want their equity up front. And this is on the seller side where they're not gonna necessarily get all their equity up front, but it's fine. Right now, we're talking about the buyer side. How can the buyer get into real estate without necessarily going to a bank? So let's look at this property called Perthshire. I'm not gonna give the full address, but this was actually a failed Airbnb. See, back in the day, I think it was like 2020, 2021. I myself got involved into Airbnb, and I'm still using Airbnbs. But a lot of investors got into Airbnb thinking they were going to make a killing, and some of them did. But you could only scale to a certain point, especially when you have supply and demand. When a bunch of people are putting their properties on the market, and because of that, you have to lower the Airbnb fees, and so now investors can't catch up because they've lowered they've lowered the daily rates for these Airbnbs. They lower it and lower it. Why? Because there's a bunch of Airbnbs now, and because the daily rates are now lower, a lot of these investors can't make their monthly mortgage payments, and so they have to sell. And so one of these properties, or they get caught by the HOA or the city or whatever, whenever they're not supposed to be Airbnb, right? And so this property used to be an Airbnb, and you'll see that there's some furniture here, and I believe the seller is selling the property furnished. Um, Most of that furniture will be sold, so things like the refrigerator or washer and dryer are included in the sell, but things like the furniture, um, uh, like these sofas, the table, a lot of these other, like the cabinets, the mirrors, not the cabinets, the drawers, the mirrors, mirrors. I said mirrors. Um, the beds, that can be sold, but obviously it's gonna be a separate thing. But it is being sold at 299, 900. So basically 300,000. And I mean, it's up for grabs for anyone who wants to do that. Usually the down payment's around 10 to 15 to 20%, depending on how the deal was structured. Most of the time, I mean, most sellers are looking for obviously that 20%. And I mean, there are a lot of people who have 20% willing to put that down, to get in the game. Otherwise, they're not able to do that at a bank.